Okay, good morning and welcome. This is our fourth Innovation Bay Wednesday morning event series, or virtual event series. I'm your host today, Ian Gardner. I'm a co-founder at Innovation Bay and also a VC. I'm an investment partner at Gelix Ventures. Also from the Innovation Bay team, we have Faden Stow, who's tuning in from Hobart. Shan Priest is our general manager, and Claire Tester is our event manager. So firstly, we hope you are all staying safe, sane, and indoors. You know, this is kind of week 5 of the lockdown here. So I don't know about you guys, but I am missing hanging out with other people. I love my family, but you know, you can only get too much of a good thing. Each week on these series, we're assembling a group of fantastic guests from across the ecosystem and bringing them on to share their experiences coping with this moment and beyond, hopefully helping all of us to connect and learn from these people who who make working in startups just, you know, really inspiring. If you missed any of the other panels, there was a really good one last week on how government is supporting startups. We've put all of them on YouTube, so just look for the Innovation Bay channel there. We've also pulled together last week a list of available federal, state, and local government support in terms of the, you know, where you can find those resources. I think Shan's going to post that link in the chat just now. So yeah, just check out YouTube, but keep an eye on Twitter for all the stuff that's going on. Just a little bit about Innovation Bay before we go on, and a call, I suppose, if you haven't become a member, please do sign up. It's free. We are the longest running community group for tech startups and investors in Australia. Our mission is to support founders and startups on their journey from idea to IPO and beyond. So we're really proud. We've been doing this or bringing the startup community together for 17 years now. That's how old we are, to learn, help, support each other as we all grow. So, you know, we really appreciate all the support that you've shown us over the years, but really especially in this moment. We've had a lot of positive feedback for what we're doing and these events. So we couldn't do any of this, and I really do want to say a big thank you without the support of our sponsors. So thank you to AWS, IAG Farmark Ventures, KPMG, High Growth Ventures, and Macquarie Bank. It's massive, the support that they give to us and the whole community. So thank you. So check out their, I'm sure you've heard of them, but check out what they do and use them if you can. Now, before we introduce the panel, sadly, I had to let you know that Jess Verrilli from Google Ventures had to cancel at the last minute. So she sends her apologies and hopes to join us in the future for another session. Thank you to Megan for stepping in at the last minute. So we'll get on to Megan. Thanks also to all of you who submitted questions in advance of the session. It certainly makes my life a lot easier when thinking about what to ask these people. We've weaved them into the list of questions. There is still a live Q&A and chat function going just now, so you'll find the links at the bottom of your Zoom screen. The chat is open. Let's just be nice and sensible, please. You know, so yeah, if you want to ask a question, don't do it in the chat, do it in the Q&A. So, all right, that is enough from me. Let me click stop there and get on to the panel. So yeah, welcome to our panel. Just maybe give us a quick wave while I introduce you. So first of all, Sam Chandler. Sam's an Aussie, moved to the Valley in 2008, founded Nitro, which develops software used to create, edit, sign, and secure PDF files and other digital documents. They've got 2 million licensed users, 144 countries, and they also just IPO'd on the ASX last December. So welcome, Sam. David Yuan is general partner at TCV, which is one of the largest growth equity firms in the world. I think TCV has invested over $10 billion in public and private technology companies. David was recognized by Forbes on its Midas list of the top 100 technology investors. That's a pretty cool award. Investments TCV has made Airbnb, eHarmony, Peloton, Netflix, SiteMinder, and Xero. And I think David was involved in investing in Facebook and LinkedIn. If I got those two right, you can correct me if I'm wrong there, but welcome, Dave. SiteMinder is obviously one of the Aussie ones that we'll talk about. That was a big success for you. So that's now, I think, one of our latest unicorns in Australia. Megan, she is a CEO, advisor, and board member for various different fast-growing technology businesses. She's also on the board of ASX-listed Tiny Beans. She was previously the founder of Plum District, where she raised millions in VC, managed a team of over 350, and grew the member base to over a million users. So welcome to the panel. Before we start, just wanted to, what we're going to talk about is, look, Silicon Valley really is still the epicenter of the startup world. And so, as players in that, epicenter, then we just want to understand how the view of Silicon Valley is to this crisis around the world. So we've asked these people to join us and we're going to share it. So, and what can we learn from them? So, all right, let's get into it. So, Sam, I might start with you. So we've asked this question of all of our guests during the last 4 weeks. So how are you? Because I think that is the number one question. I think we should all take some time, whenever we get in a Zoom call, because it feels like Groundhog Day, just spending all day in Zoom. So how are you, and how have you and Nitro been affected by this pandemic? So let's start there.
Sure, Ian. Look, doing pretty well, all things considered. And I think, we feel pretty privileged. I personally feel pretty fortunate. And I think Nitro as an organization feels pretty fortunate. We're knowledge workers selling to other knowledge workers. We can work remotely. Our business is actually seeing some increased demand on the back of kind of remote work enablement requirements. So in many respects, we're seeing opportunity, amidst this pandemic and the ensuing financial crisis. So look, we've got money in the bank, no debt. We just IPO'd in December, as you pointed out. We have returned to a fairly normalized level of productivity, I would say, as an organization pretty quickly. I would say we're at 90 to 95% productivity within a couple of weeks of implementing global remote work and the cessation of all travel. So look, we feel like at the moment we are getting off very lightly, so to speak. And yeah, we feel very fortunate, very, very grateful. I mean, similar lockdown here in San Francisco as in many, other places that have comparable lockdowns. But, personally, in pretty good shape. Grooming aside, although one of my team this morning said, "You're not going to go on that panel looking like that, are you?" And I said, "Challenge accepted." Look, we've got other Australians like Mike Cannon-Brooks, whose company seems to get more successful the scruffier he looks. It's a worthwhile thing to pursue, I think. But look, all jokes aside, personally pretty good, and the company's doing very well. So yeah, we certainly feel like we've gotten off, at least at this stage, pretty lightly.
Just before I move on from you, I found it fascinating. You said that, within weeks you're back at 95% productivity from where you were before. So why would you ever go back to an office?
We're getting that question from some, parts of the team at the moment, actually. Look, I think there's obviously immediate change to how we operate as a result of the pandemic, but I think there will be lasting structural change in terms of how we operate and in terms of how we sell, how we go to market. I think there are lasting implications here for how we work, and maybe more remote work is one of them.
Yeah. All right, Dave, let me jump to you. So again, same question, how are you doing? And I guess a follow up from that, how's the portfolio faring?
Yeah, I think similar to Sam, I'm super grateful. On the personal front, I get to spend a lot more time with my 11, 13-year-old, and they also have distance learning, so it's not quite full on. I know some folks with younger families. This close time can be a little bit too much, but for me, it's been great. We're healthy. We have a nice place. TCV global headquarters is in my Peloton room, so that doesn't suck.
So is that Peloton bike in the background, just by the way?
It is a bike in the background.
Yeah, you should have been doing an active, promotional video for us with in Lycra.
Well, that's right. That's right. I don't have a coupon code, but I will send you an affiliate link. It'll help my kids go to college. So.
Great.
So, there obviously there's certainly a lot of health issues out there, and we've been fortunate to not be affected by any so far, and the personal life is great. On the portfolio side, it's really interesting. I spearheaded a lot of our portfolio review across the fund, and we have a wide range of companies across B2C, B2B, Europe, US, Australia, Asia. And I would say that it's been really interesting seeing demand flow through the different geos over time and then across the different segments. And I would say that we have a handful of companies that have actually seen some fairly strong outsized demand, so similar to what Sam described, which was a bit counterintuitive at times. And then we've had a number of companies that have been hit relatively hard by shelter in place and some of the demand slowdowns. And then the vast majority of the companies are somewhere in the middle. And so it's been a really dynamic time. I'd say it's been stressful. It's been energizing. There's something about wartime that really tends to bring out the best in people. And we're working our way through it. But yeah, it's generally we're in pretty good shape.
Okay, look, we'll come back to you. So Megan, want to jump to you. So again, how are you doing? And then secondly, thank you for stepping in last minute again. And then my follow-up question is, really about your links to Australia and observations on, as a US based person and what's happening in Australia.
Right. It's a great question. Actually, someone corrected me the other day when I asked them that. They said, you're supposed to ask, how are you doing today? Because it's so different day to day. And I said, okay, well, point taken. So I'm doing great today. On a personal level, my family's actually questioning whether or not we actually had COVID. In California, it's very hard to get, we couldn't get tested at the time, despite numerous visits, but we feel a lot better. So, and we're kind of hoping we actually had it so that we have the antibodies.
Megan, just before you go, you are a little bit quiet. So I don't know whether it's your headphones or whether you can switch to the laptop.
Is that better?
Maybe
Is that better?
Yeah, or it could be that you're coming through in a different mic rather than those headphones.
Is that better right now?
Yeah, that's a little bit better. So maybe just stay close like that. That's better. Thank you.
Let's try that. So I won't repeat all that. I would just say that I'm feeling better health-wise. Moving on to my portfolio, similar to David, we have folks all over the place in different industries, different sizes, early stage to much later stage. Some of them, this has been a huge opportunity on the healthcare side. A number of healthcare companies they were primed, they had plenty of cash in the bank and have been able to make quick investments. There are a few that it's been harder, but in general, feeling grateful there. Specifically how it relates to Australia, it's really interesting to me, serving on a board that's based on Australia, where we have, folks there and then we have folks here in the US, just how people read the news differently and how the risk is different, how people think about their families differently. They think about work from home means very different things in different locations. And obviously just, if you compare how New York and, the West Coast is being hit relative to Australia, it's just not as hard. So you've taken different moves. So that's my observation. But it's just in general, I've had a couple of board calls where we've said people are just looking at this risk very differently based on where they live.
Look, Sam, I might jump back to you. I mean, like you've been in the Valley now, like, what, 12 years. So you must feel like a bit of a resident, but you do run a global business. I think before we pressed record here, you're saying that Dublin's now your biggest operation, and you've also got the Valley and Australia. So, I mean, as a global operator, I mean, what are your, I guess there's a couple of questions here. Like one, how have you thought about structuring the team? And two, how are the relative places doing in terms of responding to this sort of pandemic and the crisis that we're facing?
Well, look, I guess a very quick recap on our team structure. We started the company in Australia, in Melbourne. We moved the global headquarters from Melbourne to San Francisco in January '09. We then scaled significantly here in San Francisco. We then started building a field sales and go-to-market organization. And we established our London and Dublin offices, and we've subsequently scaled Dublin in particular to be a very large operation now. And very, very successful one actually for us. And so really as we've grown the company, we've thought about it in terms of locations, through the lens of where is talent, where is capital. And initially the SFHQ decision was driven primarily by the fact that in the mid-2000s in Australia, lack of talent, lack of capital inability to scale successfully there, then I think the situation for what it's worth has changed significantly today. But at the time, that was the right decision. And then more recently, probably the big trend in the last maybe 5 years has been towards balancing our allocation of resources and investment between EMEA, or Europe, Middle East and Africa, but specifically Western Europe and the US. The US or North America and Europe represent for us pretty much about 80 or 90% of our business. So we're pretty well distributed between those two locations, and we have a good amount of hedging, I guess you could say, in the way that we think about our sort of people strategy. But now we have most of our product and engineering operations in Dublin. And we've found that to be a really compelling place to find great talent and keep it for longer. The Bay Area challenge is everybody's very expensive and they don't stick around for very long. It's a cheap generalization, but it's largely true. So that's kind of how the team is set up. Most of our senior executive team is still here in San Francisco. But I think you look at COVID and the response to this, it's really proving that we can have more of our operations remote than we thought, and that location matters even less. Time zone still matters, that's really worth saying, but location within the time zone matters certainly, I think, less and less. And the big observation for us is that, with the emergence of this pandemic, the two obstacles that were preventing companies around the world from interacting amongst themselves and, internally and externally, that the real blockers to sort of fully remote work were really the broad scale adoption of video conferencing and the cultural barriers, to that broad scale adoption, because the technology was there. So with those two things kind of blown away, we're actually seeing, great levels of productivity. The team's responded really, really well. I'm super proud of what they've done. It's been incredibly impressive. Yep. And I think probably in terms of how we've thought about the response, well, look, we are in different markets, so we have to think about local rules and requirements and legislation. However, we moved kind of ahead of all of that. So we actually implemented a global work from home policy, and we ceased all travel on March 12th, which I think was a few days before the Bay Area shelter in place restrictions came into effect, certainly ahead of many other places. But we actually implemented that on a global scale immediately. So when it comes to kind of health and safety issues for Nitronauts, we generally kind of think globally to the extent that that's applicable, and sort of just took the lead and implemented that, just over a month ago now. And it really is, we are back to, nearly, I'd say 100% productivity. Not necessarily everywhere, but you're finding in some areas you're more productive. In others, maybe you're a bit less. It's a little bit hard to work out where you net out, positive or negative, but I would say it feels to me like we're at certainly 95 or 100% productivity.
Yeah, that's great. And Nitronauts is just the name of what you call the employees, is that right?
It is indeed. That's why we have our Nitro Man on the Moon t-shirt.
Very nice.
We'll be sending around t-shirts, won't you, Sam?
Yeah, I can.
Still hiring?
I'm a size medium.
We're still hiring. In fact, actually, our hiring thus far hasn't really been affected at all. We probably, we'll think about our hiring plan for the year. We haven't made any decisions to wind it back or constrain it as such. We'll look at that. As I said earlier, we're seeing pretty even demand through the business at the moment. Obviously, the global macro, if the whole world turns upside down, all the excess demand or new demand in some places won't matter. But at the moment, things are tracking pretty well. So our hiring continues apace. Yeah. We're just learning to onboard differently. We're thinking, and some of our roles in the hiring plan have changed. We're probably hiring less of the roles that might serve us, for example, the things we can't do anymore, like field marketing events, and more of other roles.
Yeah. Dave, I might ask you a question here just about Australia. So, I listed some of the best companies that we've heard all about the US, and that really is TCV's stomping ground. But you have also been over here. You did invest, I think, back in 2013, 2014 in SiteMinder, which is, as we said, an Australian unicorn. It is in travel, so I suspect they're getting smacked around a little bit. So, maybe just a comment on Australia from a US investor's perspective. Why did you come here? What do you like about it? And I guess, an observation on if you have any insight on what is happening here versus overseas.
And Dave, you have to be honest about the fact that you're a surfer. I want to understand what influence that had on your decision.
Yeah, SiteMinder has done well, and then we have another company called Zero that's done well. And so only now am I not getting a bunch of crap from my partners about my trips to Australia and New Zealand. So as Sam knows, I've been heading over to the Sydney and Melbourne for 6-7 years now, and I think what initially attracted me was a bit of what Sam described, which is you have these cool capital, and also as Sam described, that's changing pretty quickly. But the general idea is that many of these companies were expanding globally almost despite themselves, right? Very low capital, an inability to field the direct sales force all over the world, but yet really good UI and product talent. And so these were fundamentally super capital efficient, product-led companies. You obviously know the Atlassian example, the Nitro example, SiteMinder, and so on and so forth. But there are many other companies that were doing this as well. Campaign Monitor that got a fair amount of press for a little while. Canva obviously has gotten a lot of press now. And so that's what initially attracted us. I would say we continue to pretty actively cover the market. I think the capital situation has changed quite a bit. And so that may change some of the dynamics, but nonetheless, really good entrepreneurs, really good UI and product talent. And I think just the ethos of the Australian entrepreneur, it tends to be a little bit more global in nature. I think Australia has a long tradition in terms of commerce with Asia. Obviously, they do quite well in the US to generalize, and then obviously in Europe. And so we are seeing a number of really interesting global companies coming out of Australia. Maybe to pick up on Sam's thread a little bit, because a bunch of thoughts were being triggered as Sam was sort of walking through his Nitro experience. Maybe two things. One is because of the far-flung nature of many Aussie B2B companies, I think they're much more comfortable from a remote standpoint and really well able to take advantage or to play defense against these types of external shocks. And so I think there's a lot of resilience in Aussie companies that I think that the world is starting to appreciate. I think the other aspect is on the flip side, I think my sense is the Aussie entrepreneurs have been a little slow to recognize the impact of COVID. So we have a global portfolio. For a couple of weeks, I was managing the portfolio review across our firm, and it obviously started first in China, then went to Europe, and the US was third, and then I think other parts of the world are starting to hit it. And so I would say it felt like Australia is 1 to 2 weeks behind the US in terms of its impact. And just like the US was slow to recognize what was going on in China, and our credit of one of our European partners who really rang the alarm bell for us, we were slow in the US to recognize what was going on in Europe. I think because the health scares really didn't come to roost in Australia until 2 or 3 weeks later, it probably was a little slower to roll into the Aussie market. So it's interesting. I think though, as a reflection on tech entrepreneurship, the world is global, and Aussies are, I think, very well suited to a global market, but yet there are sort of local cultural aspects that still impact sort of mindset and outlook. So.
Yeah, I should maybe just pick you up a little bit on that. I mean, Australia's only had, I think, 6,500 cases. Our growth rate in terms of new cases is now at less than 1% a day. And it's still tragic, but there's only been, I think, 55 deaths in total. So, I mean, in terms of overall impact, I think it feels like we're coming out the bottom end of the curve, but we are all still locked down at home. So, and that's kind of what you might want to see. So anyway, look, it's a shit show all around for everyone. So it's there's no good outcomes here really. So I think our job really is as investors and entrepreneurs to make the best of this situation, which I think is what we're doing. Megan, I might lob you a sort of more generic question. This came in from one of our audience when they registered. Paul's great questioner with this stuff. So Paul Wallbank, and his question is, how relevant is the startup sector given the scale of the economic disruption we have seen in the last month or so? So why startups now?
I actually think they're really relevant because from my perception or my vantage point looking at the portfolio companies and the boards that I sit on, the ones that are able to move faster are the startups, and where and that's where I see a lot of the innovation coming out of. And they're providing examples and getting press in a way that they wouldn't otherwise now, because everyone's just trying to figure this out. And so I think they're more relevant than at any time. And there was actually, to tackle something that David was talking about, I think Aussie entrepreneurs are actually particularly interesting. Yes, I agree with David's comments that they were later, and that was some of the board conversations I was having. But I also find that they're more resilient. There's a stiff upper lip that comes out. There's like, hey, we got this, and they're willing to take more risks. And maybe that's a little bit because they don't know what's coming, but that's a little bit of what I've seen. So, and that's specific actually to the startup CEOs, and I'm talking to in Australia.
Yeah, I think Dave, I'll jump to you in a sec, but in the first panel we did with the VCs, like Paul Bassat made the point, that the next Atlassian is going to be formed in the next 2 or 3 years. So, I mean, I don't know whether that was the point you're going to make, Dave, but, startups founded in downturns. I mean, do you want to comment on that, Dave?
Yeah, I mean, if you think about the most, the biggest companies that have been built, Google was founded not founded, but really scaled in a downturn. Facebook obviously really broke out in the last downturn. And the thing I like to remind a lot of my companies is that Facebook had a down round, right? One of the most dominant tech companies, one of the largest companies in the world, had a down round. They went from 15 billion pre to 10 billion pre, and you know what? It didn't matter. And likewise, that was right around the time that we invested in Facebook, and so I think likewise, I think investors are looking for that next breakout, and this is where you can have really you can become part of a really interesting and breakout platform. So I think actually, I'm not trying to diminish the challenges that a lot of companies and a lot of startups are having right now, but there is real opportunity here if you can get to the future state.
Yeah. Sorry, Sam, you got something to say?
Just going to add to that, I mean, in addition to what the guys have said, I think, yes, startups are more responsive, and the smaller you are, the more nimble you should be. That sort of follows. But one of the interesting demand things that you see is when it's a time of great change, it actually it doesn't benefit the incumbents, and the sort of the pre-existing power structures the way that it might do ordinarily. So I think startups have a shot, like when all bets are off, everything's on the table. Whereas if it's business as usual, you're going to stick with that vendor, you're going to stick with that supplier, you're going to buy the big brand that you've continued to pay a premium for. We actually found in our business back in 2008, 7, 8, during that financial crisis, that we had a surge in our enterprise business where previously, customers had never really contemplated, looking for other options in this particular product category of document, productivity and e-signing. And all of a sudden they were forced to. So I think there are some really interesting demand side things that happen as well.
Yeah.
Hey, Sam, can I riff on that point for a second? The interesting part is the story of most successful startup companies is high growth, and you're growing so fast that it's really hard to tune the engine or fix the engine while the car is going down the highway 100 miles an hour, right? And the really interesting point, I'll credit one of my portfolio companies, Toast, that espouses this analogy, is right now everybody's car is in the shop. And so if you can take the hard actions to get yourself to a point where you're fully financed or you have a runway, you can really focus on the future and really focus on really tuning the elements that are just really hard to address when you're growing really fast. Things like really crystallizing your product portfolio, really working on the architecture and the UI, really automating your onboard processes. Like, these are really hard things to do when your revenues are growing really fast and you're just trying to make that next quarter. and you're facing really stark competitive pressures. But when everybody is in the shop, your startup competitors are in the shop, the incumbents are laying off people, and frankly, their managers are likely refreshing their 401ks every day. Like, this is the time to make sure that you merge into this future state, ready to rip. So I do think this is a massive opportunity.
Yeah,
you can be bolder. Yeah, for sure. And I think
well, I would argue if you're not bold, that's the problem. For my companies right now that aren't taking risks, aren't innovating. I mean, I'm getting on the case of the head of school for my daughter's school, because I'm like, you got to innovate, you got to try. Like, this is, no better time to do it. So that's where you should be pinching yourself if you're not innovating and not testing enough, because actually this is where the incumbents as well as the startups can do it. Is if you've been getting a lot of pushback on whatever initiative you want to do, whether you're a leader or someone within the organization, this is the time to like push the agenda and just ram it through. Because if it fails, so what? Lots of things are going to fail. Right?
Yeah.
So that is an opportunity as long as you're not foolish about it.
I think I made this point in one of the previous events, but 20 years ago, if this had happened, then it would have been a disaster. Like, because there was no Zoom, there was no supply chains, there was none of the innovations that we're now relying on. And Sam, 95% functionality within 2 weeks. I mean, that's unbelievable. And most of the innovations that we're relying on now were startups. So fast forward 10 or 20 years, if this happens again, we'll probably get it fixed with a vaccine within a week, and we'll probably have much better virtual tools and entertainment, whatever. It's startups that are driving the solutions to these problems. So,
yeah.
Very much so.
Look, Dave, there's been a few questions coming in just about the US investment landscape, and TCV has made investments overseas, but and this question came in from a few listeners. So Tim Mullen, Barbara Sharp, Michelle Clemens. Are US VCs now only focused in the US, or are international investments still on the table? So, I mean, you can talk obviously specifically from TCV, but are you seeing a trend or otherwise by your other VCs over there for looking beyond the US?
Yeah, maybe I'll speak for TCV for a second, and then I'll generalize. So for TCV, absolutely, 100%. We're looking at deals across Europe, US, Australia, New Zealand, and parts of Asia. So 100%. This is unfortunately my third downturn in my career. I started investing in 2000, right in time to catch a couple falling knives, and a couple years into it, I was pretty sure you could never make money investing in tech. So so that was my first experience, and obviously 08, 09 was not a lot of fun either, and here we are. I think this is a natural human cycle, right? We're 4 or 5 weeks into it in the US. Obviously, China's further ahead. Europe's probably 7, 8, 9 weeks into it. And I think what happens is something like this. You try and assess, what the hell's going on. You try and understand where you have, understand the challenges that they're likely to face in the near to midterm. You make sure they're fully financed, and to all the discussions we had earlier, you make sure that they will exit this state in a stronger position. They'll be the ones that survive, so they'll have, by definition, higher market share, a balance sheet, the trust of their customers, their employees, and a really concise and thoughtful strategy, right? So that takes some time. For us, we were on top of it. That we don't do everything great, but the one thing I would say that we've done well is we were really on top of this early, and so we've already emerged from this phase of figuring out how do you protect your current teams, your current companies, and then similar to the point around our investment in Facebook. This is an amazing time to go deploy new capital. Once we have a sense of our portfolio and the overall demand dynamic, because as Sam mentioned, there are companies actually doing better than they were in 2019, and labor's cheaper, acquisitions will be cheaper, so on and so forth. I think the other aspect to this is, even in the most challenged markets, you have, there are certain verticals where 10, 15, 20% of the merchant base will go bankrupt, which is just horrifying human costs, But what will occur after that is you'll have these masses of new merchants that will step into the void and with their new offerings and so on and so forth. And so if you're a startup with a great product, you get to compress 5 years of sales cycles into whenever we reach normalcy, whether it's 6 months or 12 months from now, in a year. And so just be really prepared for that. So I think we are, I'm not saying we're out brazenly throwing money around, but we are really carefully studying the companies and the markets that we care about. And I think this will be a really productive, couple years once we've sort of settled into this new norm. And we should talk about the new norm and some of the demand aspects.
Megan, do you want to touch on that? I mean, you do some investing and exposed to this, so.
Yeah, so I would say that I've got a mix across. We've got some investors and we're strategic, sure, saying, look, we're shut for business until we figure this out. We're in triage mode with our portfolio companies. And then I've had a fair number of outreach saying, hey, no, we're actively in the market. We're ready to go. And so it's folks are really filtering out right now, I would say. And so I think you're going to see some very concentrated outreach from a handful of investors, and I think you're going to still have folks saying, "Look, I'm going to take care of my portfolio for a little bit longer," and it all goes back to risk. And do you use this as an opportunity and figure out how to thrive, or are you still wallowing in the crisis? And I don't think that's a good spot for anybody, whether you're an investor or a CEO.
Yeah.
Maybe to build on Megan's point, because I don't want to do a disservice to the entrepreneurs in the audience. It does take a while for the industry to absorb this type of change and this new data, and risk tolerance will go down because there's more uncertainty. So I 100% believe that the venture community will be back in force in the short to medium term, and there's $1 trillion of dry powder and private equity and venture capital out there, so that has to get deployed. That being said, you should expect fundraising to be harder and longer, and you should manage your financial and your employee situation accordingly. So I'm giving you sort of an investor perspective, an investor time frame. I realize that many early stage companies have 3, 6, 9, 12 months of cash, and so you just need to be cognizant of that.
Yeah. So it's an important lens to think through. Like Nitro is super fortunate, as I said earlier, because we're basically in a break-even-ish, state. We'll only burn about $1.5 million this year at plan, and we raised $45 million a few months ago. So that, it's worth mentioning that as we thought about 2020, we were concerned about the macro. We weren't envisioning a pandemic, but we were concerned about the capital markets getting harder in 2020. And so that was certainly in the back of our minds as we prepared our listing last year. But there are kind of ways you can calibrate a business in terms of its financial profile to make it a successful business irrespective of what's going on around you, and so just being really disciplined about how you think about that cash burn profile, always raising sooner and raising more than you need. It's cliched, but we actually thought about raising a bit less at the end of last year, but we ended up, deciding to go ahead and raise what we raised, and boy, are we grateful for it now. And the arguments for raising more were the same then as they would be now, that if there's a rainy day, like it's wonderful to have that excess cash on the balance sheet. And it puts you in such a strong position, to Dave's point, when asset prices fall, all of a sudden things that you thought were not really maybe smart strategic moves or a great use of cash suddenly become very compelling. Not that you should abandon your morals and your principles in terms of how you think about organic versus inorganic growth. But if you've got cash on the balance sheet, like there are clearly strategic opportunities arising out of all of this. And I think, maybe just to riff a bit more on Dave's comments, I think the way that you're thinking about it, Dave, from a venture perspective, in terms of maybe the stages back to the new, well, we are maybe the new normal already, but what does the future look like? If you think about how companies should deal with it, we've very much thought about this in terms of what's our immediate response? Like what's the reaction that generates the best shot at immediate business continuity? So sort of start with that. Then you get back to kind of hopefully fairly quickly like a normalized operating productivity, which may not be truly normal. It's different, it's new, but it allows you to move forward. And then there's the third phase, which is optimizing for the new normal. And that's, from a venture point of view, it's like, what's all this dislocation creating in terms of opportunity? Well, for you as a business operator, if you're a CEO or a founder, like what's the new opportunity that's emerging out of this? And how can what are the competitive advantages that have emerged that you didn't have 3 months ago? Like if you're better at inside sales than your competition who's been selling in the field for the last 20 years, then, you've probably got an inherent competitive advantage now across 100% of your deals. Little things like that. And then there will be on the other side of this, I do think there's going to be lasting structural change to the way that we all work. And that's just, that's kind of fascinating, to me. And it's hard to envision a year or two from now that things will be, even if pandemics have subsided, there's a vaccine or good testing or whatever the combination of things might be, it's hard to imagine that we'll return to exactly the way we were. And those of us who spend half our lives or more on planes, largely because people on the other end of those long trips don't use video conferencing for whatever reason. Now they do. Now our family gets to have us at home. I'm not sure my toddler's going to be able to go back to dad being on a plane for, more than half of every month.
I think you're going to have a bunch of neurotic pets that have got used to having humans around the whole time, and then you leave them again. They'll be like, what?
Hey, one quick call out. Sam has what you want, right? So I talked about getting to the future state with cash, with the trust to your employees and your customers, with a good strategy. The other thing that the quicker you can get to it, you will be very well served, is confidence, right? You want to get through this state as quickly as possible. And some of it is exogenous, but much of it is mentality, which is you want to do the hard steps now so that you can start looking forward and you can have the confidence to start incrementally leaning into your bets. And as the exogenous aspects start to stabilize, you can do more than lean into your bets, but actually take some very bold actions. And you have the confidence because you have a reasonable balance sheet, the situation under control. So that I really empathize with all of our entrepreneurs, and both in the audience and our portfolio, that I think that some of them are having to take some really hard actions, but you want to do those quickly and you want to do those in scale so that you can get to that other side. Yeah. And the next action can be an offensive one, not a defensive one.
I want to stick with this IPO, and like you mentioned the listing process and the fact that, Sam, you've already managed to do it. I guess question one, Sam, is like, how was that process for you? And then I guess for everyone is like, what are we thinking about that IPO window, or as an opportunity for startups to get some liquidity and an exit? So, maybe Sam, let's start with you and then throw to the others.
Well, look, it's 6 months of your life you'll never get back. That's for sure. All I've ever done is start companies. Since I was in high school, I've never had a real job, so to speak. So I've always had to kind of pay my own way. And I've always worked pretty hard, but I don't think I've worked harder than I've worked over the 6 months leading up to that listing.
So was it much harder than raising a round of VC?
Yes, because it's different. It's just far more intensive. With VC, you might have relationships with a bunch of firms. You might solicit term sheets. To be honest, if you're not running out of money, it can be a fairly relaxed process. However, with an IPO, you basically have a work back date. You've got a listing date, and this whole machine spins up around you, of lawyers and bankers and advisors, and it's this army of people and things, and it all runs at this listing date. And basically, it is inevitable that a number of material curveballs will emerge, smaller ones and bigger ones, but you basically have to operate the business, at least in our case, at our scale, right? We're not, a much larger company going public can probably avoid having the operations and the IPO process overlap so much in terms of the executive support. But in our case, it was basically myself and our CFO who really were in almost all the process and driving a lot of it. So running the business while trying to hit your numbers in order to unlock the IPO, while managing this process that's got a clock ticking, it's the countdown clock, and you can't change it. Yeah. It really is it's this ultimate forcing function. I'm not sure if everyone's aware, are you aware, Ian, but in the Australian markets towards the end of last year, the markets really started to turn upside down. Things went very pear-shaped. And so we had, I think, 8 failed IPOs immediately preceding our listing. So in the end, we got out successfully. I think we were the 4th largest tech IPO on the ASX last year, but there was a period there where we went from thinking, oh, we can still do it, to, oh my God, if these other great companies are failing, then what's going to happen to us? So we were successful in getting out. It's absolutely a worthwhile thing to consider. I mean, it's another form of capital. We were kind of essentially a Series C company. We'd done our Series C round, privately with venture. We thought it was time to become a public company. For a whole bunch of reasons, we thought the ASX was a very attractive place to go public. And we remain of that belief. So we were able to raise 45 million, USD, and do that from a position of strength. I think being a public company now, our stock price got whacked just like everybody else's, lost 30-40% of its value, very quickly. It's now regained a lot of that. And I think we'll come out the other side, fine. But you have to be just willing to stomach that visible, perception of loss of value in the market cap as the public markets do the crazy things that they do.
And sorry, Sam, I might just jump to Megan there. So, I mean, Megan, you've been involved in this process as well with Tiny Beans and a few other things. So, I mean, I guess a general observation on, is the window closing, and how was it for you?
Yeah, I mean, I think what's hard here is, so if you're going to try to raise venture in Australia versus going public, it's really a size issue. But if you were thinking about trying to raise capital in Silicon Valley, in the US, or in Europe right now, that process timeline is unknown. Even though if there are investors out there, unless you know them, you've been tracking with them, they know, like they're kind of inside your business a little bit. I don't think those are short timelines. And so then the ASX, in some ways, you have a little bit more control over that process, particularly if you're based in Australia. I mean, Sam's unique. We did the same thing. Our Tiny Beans is actually headquartered in New York now, because our user base is mostly in the US, and our CEO is there. So we did something very similar to Sam a number of years ago. But it is, it's a process that is very different than fundraising. The traditional fundraising for a US company in the US is much easier than going public on the ASX. However, the folks that are on the phone have a unique opportunity to get capital in a way that I've actually had US companies that are billion-dollar unicorns that are part of my YPO group ask me about listing on the ASX because they see it as an opportunity.
Yeah.
So I think that's an interesting insight, that it's actually going the other direction.
And Dave, I mean, you've had several of your portfolio go through a listing process. I don't think you've listed on the ASX yet, but I mean, I guess the question for you is, have you got a perception on ASX versus any other market? I mean, Megan alluded to, Tiny Beans is listed ASX, but US based. Life 360 did the same thing mid last year, US based, Aussie listed. ASX versus other, David.
Yeah, look, I'm not the subject matter expert because I haven't served on an ASX board. I would say that as we look at exchanges, I think ASX is certainly viable. And I think hats off to Australia with the superannuation funds that have really made the demand side just incredible. It's an incredible environment. And so the question is how sustainable is that? Because these superannuation funds obviously services people's retirement accounts, and so if it's a little bit there's a little bit of a circular effect. But my general sense is it's a really positive dynamic associated with the superannuation funds. So look, it's not as big as some of the other exchanges, but I think it's certainly big enough for most companies, and it can be very positive. We've seen a little bit of a blowback as it relates to non-Aussie companies going to the ASX, and so I'd focus on the ASX. If you're an Aussie company, as a US company, it's a little bit suspect if you don't have a direct operating history or current facility like Sam and Nitro. So we certainly look at it for some of our portfolio companies, but mainly for companies in the region.
I think that's right, Dave. I think you've got to have a nexus, or it needs to be something that the company can do without forcing the company to do unnatural things from an operating point of view.
Yeah. Ultimately, capital flows across. Capital is global, and so if it feels like there's an arb play going on, I generally don't think those things hold up over time. But for Aussie companies, I think the ASX is great.
Okay, look, we're into the last sort of 4 or 5 minutes, so I just want to try and get to a bit more rapid fire. Maybe a quick question on the government support. So I don't know who wants to take this, but I mean, we're seeing 15% of Australia's GDP has been targeted at just helping us, the whole ecosystem, not this, the entire economy through this crisis. What's been happening in the US? Who wants to take that? Megan?
Maybe.
In general, people are applying across the board. There are different portfolio companies, nonprofits, for-profits. There's chatter about whether it's fair or not for startups that aren't profitable to be taking government money. Regardless of whether it's right or wrong, it's just happening. I would say that there's not enough. There's not going to be enough. What I'm seeing it's very localized, and it depends on the bank. So there are some banks that are just not even getting back. People don't, and then there are other cases people already have their money. So in general, I kind of think it's a shit show right now. And I say, if you can get the money, and get people back to work.
Yeah, no, that makes sense. All right, let me take another one. Stuart Snyder, have attitudes towards using a remote workforce over a physical headquarters changed in the Valley as a result of COVID-19? I think we kind of touched on that with Sam's response to it, and the fact, I mean, Sam, is it typical? I mean, are you seeing other companies adopting that same approach of, oh my God, we're 95% productive, and we don't have offices and rent and all the crap that goes with that?
Yeah, look, I would say the Bay Area is obviously one of, if not the most progressive places in the world. And so things like remote work have been a pretty key part of working here for many, many years. So I feel like this is just the tipping point that we needed to get the laggards, who weren't as embracing of it as an option, over the hump. So I do think this will really push us the final mile. Look, Nitro we have offices, but we also have a remote team. I actually do think after this, crisis subsides, that we will end up with far more of our team being remote, or more of our organizational structure supporting flexibility, greater amounts of flexibility. I do know, I was speaking to a friend yesterday who's a successful founder, earlier stage startup, and he was saying that they've already shut down their office. They were leasing a space, but now they've just gone fully remote, and that's their intention now, is to stay fully remote. So I think you're going to see a lot of that going on, where startups, and it's worth considering, if you can't be in an office space for 2, 3, 4 months, some indefinite period of time, why not just assume that this is your new normal, go fully remote until such time that the world changes again? You certainly save the money. So yeah, I think it's ushering in that sort of completeness of change to the what we call at Nitro kind of the future of work.
Yeah, and this question is kind of linked to that for Dave, I think. So as an investor, how does the new way of working change the way you think about your proximity to and how you help your portfolio? That's from Jeremy Little.
I think it's just accentuated something that was already in place. I mean, as an example, at one point in time, I was on a board in Warsaw, New York, DC, Sydney, and LA. So it's just hard to just catch up for coffee with my CEOs. And so it's always been phone and video conference anyways. But I think it's becoming much more socially acceptable to video into a board meeting. I still think it's super important for a board to get together at least twice a year and actually do half a day or a full day sort of strategy debrief, because particularly right now, because you will see some great opportunities that require taking a lot of risk and bold moves. And so you don't want to start from the first page of a novella, strategy novella. You want to be, well into the have for the last chapter, and so that the question isn't the strategy, it's the execution of the move. So there's still a huge role that in-person plays, but remote is definitely very viable.
All right, last couple of questions. So Megan, I might throw this to you. So what sectors are hot now from the US perspective? And there's a bunch of different people asked this question. So Karen Chan, Darren Dwyer is asking about IoT, Max and Quiro is asking about agri, and Paul Ramdage asking about EdTech. So what are you seeing? Are the trends changing around what sectors are hot?
I think, yeah, so obviously healthcare is hot. If you're going to, help solve problems in the world, that's obviously hot. I think there's things, people paying more attention to what's around them, their surroundings. So consumer is hit in hard areas, but if there's certain, I have one portfolio company where, it's small furnishings, and that's actually doing really well. There hasn't been a drop. So Internet of Things, I think, people wanting things to be, if they're getting better on Zoom, they're getting better on other things that involve technology in their house. And so I think that area is going to be hot. I think a category, sustainability, ESG, climate change, all that kind of stuff, I think people are just thinking about the linkages. I'm not sure if it's hot or not, but I think people are trying to think about it. And maybe that's just a California perspective because, I'm worried about the wildfires already that are about to come. And I know you guys have the same issues in Australia. So that's another area that I hear topics about. And obviously there are a number that are going to be hard hit, but I'll leave it to the other guys to give their thoughts.
All right, I'm only going to ask one more question because we are pretty close to time, and it's a sort of selfish one from my perspective too for Dave, and it came in from Anthony Curtin. When is Peloton coming to Australia?
I can't comment on that, although I have seen some Pelotons in Australia. So where there's demand, people will find ways. But
the only time I ever used a Peloton bike was a hotel at the Westin in Silicon Valley, and it was fantastic. Yeah, I really enjoyed it.
Yeah, we started with the commercial, we'll end with it. I took one spinning class in my life. I hated it. I started on the Peloton. I use it 15 to 18 times a month. That was pre-COVID. I probably use it the same amount now, but my wife and my daughter on it. So it will change your life.
Yeah, well, I got on, I went down to the gym expecting just to do a sort of quick cruisy 20 minutes in the bike. And I realized it was then competitive. And I butchered myself for an hour just in order to try and get in the leaderboard. It was quite interesting.
Yeah, I'll kick your butt.
But be careful what you wish for. I'll take you out on a bike when you get here, Dave.
Okay.
Yeah, do that. I'm prepared to lay a side bet in that one. All right, look, I think we'll call it there. So look, thank you to all of us, or to all of you. So Sam, Dave, Megan. I think we've got through quite a lot of questions. So look, take care of yourself and your families and your teams, and we will see you on the other side. I'm going to switch back to slide share mode just for 1 sec, just while we wrap up. So there's a couple of things coming up. We didn't get to ask this question. I had a question around brain drain or reverse brain drain. I mean, Pat Llewellyn, I'm sure Sam, you know him, and Dave, you probably know him too. I mean, he's now back in Australia. He's a terrific founder, amazing guy, lives in Melbourne. We've teamed up.
He's not this handsome in real life, though.
Yeah, I don't know. I'm not that inclined.
I hope he's on, but. Pat is a great guy. It's terrible to lose him from the Bay Area, but wonderful for Australia to have him back again.
I know, it's great to have him back. So look, anyway, it's tomorrow. We're doing a new weekly series that we're going to be doing one-on-one interviews. This is in conjunction with AWS. So it's tomorrow at lunchtime. We've got Rachel Newman, who was on the show, I think, last week. She is interviewing Pat tomorrow at noon. So please do tune in for that one. As you know, and we've talked about, we are doing this event every Wednesday at 8 a.m. We've got one next week really on the subject of mental health. I mean, it's pretty tough. I mean, it was good that I think this week we didn't focus too much on it, and we had a bit of levity, but it is tough. A lot of people are struggling out there. And these are three of the best people we could think of to answer this. So we got Amanda, Jane, and Craig. So that's going to be terrific. That is next Wednesday at 8 a.m. So I think you can register on that bit.ly link on the screen. So IBWED22. I'm pretty sure that is all caps because bit.ly is case sensitive. Call out to the audience any other topics or guests that you want to hear from. So we actually do, we haven't announced it yet, but on the 6th of May, we have a very special guest, which we'll announce next week. So there's some stuff coming up, but yeah, let us know who you want. A couple of final things. If you're a fintech startup or interested in fintech, make sure you come along to our event with X15 Ventures on the 23rd of April. So they're looking to partner with, seasoned entrepreneurs, offering support, guidance, and access to CBA's customer base. Plus, they're going to be announcing a new hackathon, which is aimed at fintech startups who are building solutions to help SMEs recover from COVID-19. So this is a fantastic initiative, something that we're helping with them to pull together. So please check that out. It's on next Thursday at 8 a.m. Pretty much done here. Faden and I came up with a news special. So we do this weekly podcast, Open the Pod Bay Doors. So do check it out. Every fortnight, we're doing a news special. So last week, we had Alistair Coleman, Emma LaRusso, and Fleur Brown. So we spent an hour talking about the latest news, what's going on behind the headlines, mostly around Australia. We've also put out 2 new episodes. Nick Carter, who's Macquarie's sort of infrastructure fund, a bit of focus on green energy and renewable stuff. That just came out today. And Luke Anir, amazing founder. So Faden interviewed him, and that came out, I think, last week. So please do check him out. Finally, thank you again to our incredible sponsors, Macquarie Bank, KPMG's High Growth Ventures, AWS, and Farmark Ventures. I think let me just check. I've got the run sheet done. I think that is it. Yeah, so thank you, panel. It was terrific. Really enjoyed that. And yeah, as I said before, please do take care. So I've been your host, Ian Gardner. Innovation Bay is here to support you all. So let us know how we can help. So please stay safe, stay strong, stay indoors. And yeah, we hope to see you all again soon. Thanks for joining.
Thanks.
Thank you.
Thanks.
Pleasure. Thank you.